Welcome to the Trading Lounge, and here we're looking at the US 30 on a 2-hour chart. That particular pattern here between wave 3 and 4 here is corrective in terms of an A and a B and a C wave through here. And it does appear that we're starting this little move up through here does appear to be impulse. It's not complete yet. It's only up in 3 waves, but just the way that it's moving and the previous correction here would signal that we'll be expecting new highs here. So above support on 15,100 would be the catalyst for a move higher through the sub levels to 15,200. That's the same with the S&P 500. The S&P 500 is working with the top of subgroup 1, which is the number 3 and 30 in this case. The pattern through here is corrective, so we can expect a new high above here. That's the main point. But also here too as well is that support on top of group 1 here normally signifies the midpoint 1650, a medium level in this particular case would be the go there. Essentially, the trend will stay in track as long as it stays above the 1620 there, the pivot within group 1. If this becomes the resistance through here, then we would see a larger correction working with the 1600 there. Support on the top of group 1 would see the price to the 1650 there. It's just a little view here of the 30-minute chart. It's probably easy to see on the cash market, but anyway, this is the corrective move through here, and you're looking for that appears to be up for 1 and back for 2 there, but we want to see a retested support on the 1630. If you're going into the micro levels, well then micro level group 1 would be 1633 support, and that would be really important as well if you're moving that close to the markets. The European markets are pretty much the same as the US markets. I've just expanded the wave count here because I was looking at this. It's just growing. I can still see it's growing. So we've got this as the 1, the 2, the 3, the 4, and the 5 for wave 1 now, wave 2 here, and the third wave pushing up through here as well. It just seems to continue to grow up here, and the trends are the market is expanding. Things are getting sort of larger, so yeah, that's still growing to the upside there. But what we are looking for here is the 1, 2, 3, 4, and this has got impulse waves here, but it's still moving. It's retested the 6600 here. It should move higher in line with the Dow Jones as well, and of course the DAX as well. The Australian market here on Friday, we were looking for a move up through here to make a high above wave 3 here, and then a corrective move back through here. Now, I can see that the US markets and the UK markets have got higher to go there, so it's probably logically that we'd be moving higher as well here. So I could put this, looking at this structure in here, won't bore you to death, but from this point here, we've got 1, 2, 3, 4, 5, so that's like a little third wave in here. Then we've got this little move up through here, which would be wave 1, wave 2, wave 3, wave 4, and wave 5. That means that we can put this this wave 3 here over here as such here, and this wave 4 here, we can move that into here somewhere, or it may even go into there. I can see that we've got 5 waves down through here, so we could have an A, the B wave could be developing, and then a C wave back into here as well before we see further upside, or it can move straight up through there in terms of the A wave, the B and the C all bunched up in there. And that's quite likely if the Dow's going to move up from this point here. Looking for support, normally you look for support on the 5230 on top of group 1. If there's a couple of options here. First of all, if the market moves down through here and then gets support back up here, then that creates the long trade because you've got the test lower through here. At the moment, yes, it has tested here lower, but it's tested lower in 5 waves here. So the rest of this could be corrective through here. So 52.17, if the market finds support on 52.20, then you could take that trade to the long side with stops under the 17 there, under the 20, so go to the 16. If once you've got retested support on 20, you can scale in through the 23 and move up from that point with the view of further development on 52.30. Now, it will, create, swinging structures across here, but after that, if support is found, then it's to the midpoint. It will be looking higher there in line with the US market. So you just need to allow the market to open, see if it finds support on the 52.20. If it rolls over slightly to the downside and tests lower through here before it moves up, Monday should just go straight up, really. So that's what I'm saying, using the closest, largest number, which would be the 52.20. Let's have a look at commodities, as they are a bit mixed, but the nickel and the copper are up. The zinc and the aluminium are slightly steady to down. So the copper sort of rules the day somewhat. So we can view that as being positive for the resources. Okay, just starting with gold here. A few points here is that we still don't have 5 waves to the downside, so we still have to view this as 3 waves here, which would obviously be corrective in terms of an A and a B and a C here. So look, we've just got to allow it to play out a bit further. I know it's frustrating. In terms of short-term trading, of course, being under the 1472 creates short trades, not long trades. So now we've pretty much got to bounce off 1430, which is really the subgroup 1 of 1414 here. So that's important. But we've got, I don't know. We just got to let it play out. This was corrective here as 3 waves. Then this is a larger 3 waves here, which is also corrective as well. So it will be a game of supply and demand. So we know that demand is here. We know that the supply is moving down through here. The midpoint here, the 1450, is where it's likely to play out, because the supply will be at the 1450 and also above that as well there. So what we can expect is this to have at least sort of 3 swings across it, and then if the 1450 becomes the resistance, the retested resistance at that point, then we can look at being bearish from that point. But otherwise, we need to look at it being positive from that point. So it's just a little game of supply and demand that will just work itself out through here and eventually find this as support or resistance through here. So a little bit, last week we understood that it would work itself into a corner. We really need to allow that to play out somewhat. So if this low gets taken out through here, then obviously that would trigger the short to the downside at that point there. So, but look, we just got to allow it to play out. There's this little pattern here is a little bit the same as this one and the same larger one. So we've got reoccurring patterns here with new highs coming in. So we just need to be a little bit mindful, of course, on that one there. The base metals have got an opportunity to push higher as well, as long as this the top of group 1 here, and you can see that this is what I call the classic pattern, where we have, it was resistance first and now it's support, and it's pretty much the normal process for a market to go through. But of course the support here can come a little bit later if the correction's a bit larger, and then up through there. But look, while that's above there, that is supported, and we need to look higher from that point there. So that's what we're doing, and I've just sort of reworked the wave count a little bit further here for that further upside there. Of course, there will be resistance at the 340 here, but the main point is that because this is pushing higher here, we're going to see, the BHPs of the world. This is US BHP through here. And just a little sort of reminder through here, we're looking at this as, I've got this as an A wave through here, but that can change as well in case we get a 5-wave structure up through here in terms of the 1, the 2, the 3, the 4, and the 5 up through here. Then we'll get an ABC, and then we'll get further up through here. So that's going to be the interesting point that will play out through here over the week ahead. So if we do get a 5-wave structure here, then we know that we're going to be, retesting much higher as well, and I'm kind of expecting it. So let's see how we go. That's the idea of sort of mentioning that the support on here would be, a buy for the bounce, so to speak. But we need to see if the bounce is going to be corrective or impulsive, and we just don't know that just yet. So, but with copper pushing higher there, we'll see how that continues to travel to the upside there. But still, we're still expecting, from this structure here to the downside in 5 waves here, we'll be expecting, it's still, this is this in proportion and ratio to all of this activity coming down here is still too small. So we still need to see, further time put in through here. It's still more time to come. So it's a little bit like, this is the Australian market actually, just while we're here. We've got about, I can't recall that much, but I can, on a weekly basis, I think this was about 19 weeks here and 14 weeks here or something. So this one is still quite new here, this little push here. It was a shorter time from this 3rd wave than the 1st wave here. So we probably could expect this to be shorter as well through here, but it still has more time to sort of play out through there in time-wise. Just want to check on the banks while we're here. So we can see BHP had opened there and moved down and moved back up. So the resources are going to, looking at copper, are going to be reasonably supportive for Monday and Tuesday. Just want to have a look at the banks while we're here. Banks are still making new high. These US banks, the UBS, Bank of America here. We knew it would stall at 13 here. It's doing that, but it will push higher through there because we've got the 1, the 2. So we're still expecting further upside there. I'll just have a look at Morgans are lagging a little bit, but still there. And UBS in the US here, I just think this is a classic picture here. It's a weekly chart, but this is a nice 3rd wave down. This is like a 4th and a 5th coming in through to here, and so we're really pushing up here. So there can be a lot more for the banks to push higher. There's that's how I sort of see it. So we're watching impulse waves build off through here, and there's definitely a 4th and a 5th here. So we're going to be seeing, there's still more in the banks, and if the US banks are going to be leading, then ours are going to be doing the same sort of thing as well, and they are luring money in and offering cheaper rates, and all that sort of stuff. So making themselves attractive. The oil market is still above 95, and also the pattern that the push that it's had up through here makes this an A and a B and a C here. So it's corrective. So we'll still see new highs being made through here, and as long as it's above this trend line and above the 95, then it's still bullish, and we can expect a retest of the 100 up here. That's what it's sort of gunning for, and we'd expect a decent correction across the 95 being the second strongest number, as we'll see some profit taking through here as well. But the bigger the correction at the previous level, the stronger the next trend. So and that's a reasonable accumulation period through there, so it's enough in terms of time to get us up to the 100 there. Right, let's have a look at FX as the US dollar is pushing higher. Okay, so daily chart for US dollar, and you can see that the wave 2 that we've been tracking through here has really pushed nicely up into the 3rd wave through here as well. So the euro, of course, will be doing the mirror opposite, and you need to relate this to all the other pairs and so forth. But look, we're on track through here. We can expect some sort of consolidation at the 83 here before we see further upside there. I do need to point out that we do only have three waves up there. So that, that can be a corrective rally and making this a larger correction in terms of three waves here for the A wave, the B wave, and the C wave, and then to the upside. But I think that the size of this ABC correction here in relation to this trend here is fine. It's well balanced, it's fitting, and we're also seeing the personality of a third wave move to the upside there as well. So when we drill in there a little bit further, we can see this is up for wave one here. Remember, we were looking for the little five waves up here, and then we spent a little bit of time. It was a little bit tricky getting through to the wave two there that eventually came in, and the strong confirmation of wave three to the upside there. So I'm not really sure if, I don't think that we can place that as wave three there just yet. It may just be five little waves up for wave one of the third wave and coming back through to here, and then further up. But what we can say is that an A and a B and a C correction back into the 83 here. Once that's completed, it may come back to the fourth wave of one lesser degree. It may just touch on here and then move up from that point there as well. But from this high here, some type of corrective pattern within here, and then up to the upside. So, if you're trading the euro and so forth, then, this little section in here will become, reasonably important. And what you'd want to see here is a nice, A and B and a C correction, just something, and then support back up here. If you can see that, then you'll know to short the euro from that time, because you got US dollars got support on 83. So that's, and then you've got group one above that, you've got 10, 20, and 30. So support on 30 would see even further to the upside. So you'd, add to the short on the euro at that stage there as well. So looking very positive there for the US dollar, and of course very bearish here for the euro here. Now, we've got our little five waves down through here as wave one, which would be the mirror opposite to the US dollar in terms of, five waves down for one and back for two here. And I won't call this in for wave three here, it's just part of wave three. But certainly we've got that five waves down there, exactly the same as the euro. So we're looking for some sort of retracement back. And, the norm is, 61.8% back of that length there, back into here. And, you just don't know. So sometimes the euro's got shallow retracements, and this would be a good reason for it to have a shallow retracement, because basically we're in wave three here coming down, but we're also in wave three of this degree coming down, and then we'll be in wave three of this degree coming down. So the third of the third of the third, and that's kind of the perfect Elliott setup that one would be waiting for. So I wouldn't, hold out for a full retracement level, but a lot of the times it comes back to the previous trend line here. It's basically retesting the trend line, the support there. So we need to be mindful of that, but we also need to be mindful that it could just be in terms of a much shallow retracement coming back up to the fourth wave of one lesser degree. But I suggest what we do is we watch it play out across the 130 here, and we try and do our best to look for a 5-3-5 structure through here. And then once it's got that as resistance there again, then you can look to short from that point. But as I mentioned before, it depends on your your tactics and your strategy and so forth. And sometimes it's just simpler to get a variety of small positions at and at sets of numbers down through here, and as the market moves through your numbers, adding contracts, you can always unwind those contracts too as the market's coming back up against you as well, and then lay them back in when it goes down again. There's small costs with all that, but it's quite a reasonable way to manage things. It's very tricky to build into a long-term trade, and this is actually what we're looking at here. So sometimes it's best to get it better to be in there, in a small way, than trying to put more in and get it in exactly the right position. So Anyway, this job for a week ahead here is to work out this wave 2 here, and as I mentioned, the US dollar can be very helpful in that as well. So combine those two there. The Australian dollar's pretty much been on track, down at parity at the moment, but in track with our wave count here. So you know that we've got the wave 1, the wave 2 to here, and then we're counting 5 waves to the downside really. Now, it can get, 1 is a very strong number, and there's going to be, a lot of large orders sitting around these numbers. So we can expect swings across these numbers, and that would also line up with the wave count that we've got as well, because you can see here that we've got, we've got a nice clean 5 waves down through here, okay? So we're looking for wave 4 to pull back, which would be the wave 4 of 1 lesser degree, and then wave 5 down through here, poking down into the 99 sort of area here. But that would just be wave 3 of that degree, and then we would have wave 4 here. This wave 4 here would also pull back 38.2%, but in line with the wave 4s of 1 lesser degree. So yeah, we could put that sort of in there, and then another low here, maybe into 98 through here, which would be the wave 3 of this degree here. So then there'll be a wave 4 back and so forth. So we're going to see a fair bit across here, so you may be better off looking at the euro at this point, rather than a choppy series of waves 4s and 5s. Alrighty, I think that's it. With the short-term trading on equities or CFDs and so forth, is that if the S&P 500 on the cash market can take out the top of the 1635, say 1636 area, then we can be sort of assured of further upside to come. So at this stage, we're looking all of this week to be positive, but breaching that, the S&P 500 taking out the 1636 price point would help confirm that, because then we'd be tracking a series of waves to the upside, but would still use the daily weekly cycle for that here in Australia, where we have Monday bullish, Tuesday morning profit taking, Wednesday V-shaped day, Thursday bear day, and so forth. So try and line that up with your price points and what you're doing. And let's keep an eye on the resources. Let's see if the copper keeps lifting at that point there, and the banks keep rising as well. Alrighty, well, good morning, good luck, and enjoy the day ahead.